if you want to proceed to court, you're going to have to actually particularize what it is you're claiming. It's all well and good to claim defamation, market manipulation, conspiracy, but on the defamation side of it, what was defamatory?
I'm honored to be sitting down today with Matt Earl of Shadowfall Research. Matt is Europe's best-known short seller, and he's intimately involved in the complete craziness that was Wirecard. Today, he publishes on companies that are listed in France, which I'd love to talk about as well as other parts of Europe. So really happy to have Matt. It's our first time speaking, so thanks for doing this, Matt, and welcome.
Oh, you're welcome. Thank you, Carson. Very nice to meet you too.
What you do today, if I understand correctly, you're somewhat of a hybrid. And I think that in and of itself is interesting. You have a subscription research service, but then you also take some of the reports and you publish them openly. Is that accurate?
Yeah, I mean, we don't publish all our research. We generally take a view on three reasons as to whether or not we're going to publish something. I mean, one is, on occasion, do we think there's a strong public interest element to it? An example of that I would give would be, as you're familiar with, IQE, the company based in the UK, where they formed a joint venture with a university here that it looked like they were gouging the eyes out of the university. So we thought that was a pretty strong public interest element to that story. Another reason would be, do we think that the investment argument around the stock is very one-sided, as is often the case, given the number of sell-side covering analysts that will have buy recommendations on companies. And then thirdly, at the end of the day, we are a commercial organisation, and it helps to advertise our products now and again to get some incoming traffic. So those are the three reasons as to whether or not we publish. But we don't publish everything.
And it's really interesting to me, something that you said a moment ago about one of the factors that you consider when you decide to publish openly is whether the narrative around the company is very one-sided. And what's interesting to me is that you sit in Europe, and the UK still, I believe, has the market abuse regulation framework of the EU. And you publish on companies that I think are almost exclusively are covered by MAR. I'm sure you're aware, we had a situation in France with Casino Guichard that almost 4 years to resolve with the AMF, which ultimately decided not to do anything. One of the theories that people within the AMF had was that because we had come out and made really our piece was a counter narrative, they said that this didn't meet the standards for investment recommendations because it wasn't impartial or it didn't present positive facts. And again, that view did not carry the day when all was said and done, but I was just kind of aghast at this interpretation that somebody presenting that counter narrative is obligated to actually represent the narrative. And I'm curious as to whether that's something you've thought about and really your view on it.
Europe's obviously a big place, and I think certain regulators take different stances on how they apply the regulation. I mean, first of all, the regulation is actually, in my view, pretty ambiguous in terms of the MAR regulations, and it's open to interpretation. And I don't for one second actually believe that it was ever legislated and set up in mind with targeting short sellers. I think it's for other individuals in financial markets to do with kind of investment bank research, but also the LIBOR markets, FX markets, and things like that. So the problem is that because it is quite subjective in places, it's beholden upon the regulator as to how they want to apply that. And so I think that amongst the regulators, the FCA, for example, in the UK, they I think take a more laid-back approach to it and think that as long as you're not overstepping the mark in terms of producing something that is false and misleading, that's fine. And as long as you obviously disclose your conflict of interest there as well, that you might be short the stock, that's fine. Whereas I think in places on the continent, particularly in France and as you might get on to Germany, the regulators there, I think, are very quick to take the side of the companies, and they see it as an attack on a company rather than actually the critic, if you like, being able to add something, a better understanding of the investment case around the company.
You bring up a really interesting point there about Europe that has been a source of frustration for us in dealing with both France and Germany, and that is how MAR is drafted. And you're right, it's very vaguely written. And I used to be a lawyer in China for a U.S. firm. The Chinese Communist Party deliberately writes laws that are highly subjective because at the end of the day, they enforce for political reasons often, and they want to have some text to which they can point and say, well, you ran afoul of this. And basically, it's highly subjective text that they can claim almost anybody or anything ran afoul of. And so when I read MAR, that's what I see, and I suspect that wasn't the intention, and I suspect, but I'd be curious to hear your views as somebody who sits in Europe and deals with this regularly. It's the result of the European lawmaking process where a lot of people have a seat at the table, and I just kind of imagine that, they probably want to make everybody feel heard. So, somebody who's from a relatively small country and did a semester in the U.S. for their PhD, wants to contribute, and they don't want to make that person feel bad and diss them like Ali G did, with crap countries. And so they say, yeah, fine, we'll put that in there. I mean, maybe that's an overly cynical and somewhat
well, yeah, I think that's probably reminiscent of most of European legislation, to be honest. Yeah, it wouldn't surprise me. I mean, the problem with it is that, as we said, it's very ambiguous and vague. I mean, they even have terms where they don't actually define notions as well. So they will talk about where it would be applicable to kind of short activists and short sellers in Europe. It would be that they have a term called recognised market commentator. They don't actually define what a recognised market commentator is. And how does one know if one's a recognised market commentator, for a start? How do you become one? Why does that necessarily preclude you from having an opinion and a voice in order to articulate that opinion? Do you become recognised, for example, from being right more often than you're wrong? If so, why do you get punished for being right more often? If you're wrong, well, no one seems to care. The market will certainly forget about you quite quickly, well, I would imagine, and you'll be kind of consigned to the dustbin of short-selling history. But how it originated, and I'm not entirely sure in terms of who was pitching in and who wasn't, but it came about, I think, mid-2016. And the other issue is, of course, it's never really been tested properly through the courts. So there's no actual precedent in terms of being able to see how this thing has been applied if things have been developed into a court proceeding.
Part of the arguments that we made when we looked at how, again, some people at the AMF wanted to apply MAR was that, well, that conflicts with the European Charter of Human Rights, which guarantees freedom of expression. Yeah. And I think the continental European comeback to that is, well, but you're commenting on businesses, not politics. And the real world comeback to that is, what's the fucking difference? Look at 2008, a bunch of companies, markets melted down, and millions of people across the world lost their livelihoods, lost homes. It seems like there's, when they take that view, there seems to be this wall in their mind between the political realm and the business realm. And look, I've been alive long enough to know that there's really very little separation there. So it's an interesting environment that you have to navigate.
Yeah, I mean, the other aspect of it is, of course, is that we have much stronger, stringent defamation laws as well. So, it's one thing contending with, I think, on occasion, a regulator that is quite quick to shoot the messenger rather than actually try and look into what the messenger is saying. It's the other aspect, which is that, again, with regards to the freedom of speech laws over here, they're vastly inferior to those that you guys enjoy in the United States, which is a shame, I think. But that's never going to change, I don't think, and I don't I hope that will ever change.
Right.
So that's the other thing.
When I look at it, almost every single activist short seller, and I wouldn't, even though it's not your sole business model, or not to the extent it is mine, but I would include you in that group. Almost every single one sits in the United States. I think you and your former partner Fraser Paring are the only two who are not, at least who continue to publish, who are not situated in the United States. Look, I got to say, that's ballsy, man. Like, a lot of respect to you for for doing this, based on where you sit.
Be much sunnier climes as well to go to than the UK in terms of climate. But my wife was never going to let us leave the country, I don't think. So we're stuck here, and we have to put up with the framework and the remit that environment we find ourselves in. I mean, with the defamation side of it, we have to be much more careful with our language as well. So it does, I think, give a different style to the research that we put out, in that we don't really put much opinion, or any opinion that we have is heavily caveated that is our opinion. We can't use words like the big F in our research, or even target prices, really.
Right.
So it does make things a little bit trickier.
Every time we do something in Europe, for years we've referred to the process of scrubbing our writing as wimpification. If these were U.S. listed companies, I'd usually pull far fewer punches. So I definitely understand what you're saying there. We covered a little bit about Shadowfall and just the difficult waters that you navigate, but I'd love to understand how you got to where you are.
I'm a mathematician. I'm minded of a mathematician through and through. So I'm interested in getting to the answer and working out how to get to the answer, and kind of a scientific way of approaching things, I would argue, which is that you form your hypothesis, you go through the process of your research, and then whatever that research outcome is, that's your conclusion as the result of it. Not that you form your conclusion at the beginning of the whole process. So I started out as an economist at Royal Bank of Scotland when it was, I guess, obviously a much bigger entity before the GFC. And I was on the trading floor there writing economic essays. And I know that economists are infamous for kind of getting things more wrong than right, I would argue, but I think that there's at least a process there where they're interested in getting to the right conclusion without having any, through an independent thought process more than anything. And then I went into equity research after that in about 07, 08, and I was just amazed at the fact that my approach was very matter of fact in terms of the result is the result and that's the conclusion, not when it would be, if I was writing on, say, the recruitment sector, saying that it was all going to implode because the economy is going to fall off a cliff. Oh no, you can't write that because we've got 3 recruitment companies as corporate clients and we'll lose those. Surely people are interested in what's going to happen. It was very surprising to me. Obviously I was much younger, much greener, very naive out of all
so that's actually really, sorry to interrupt, but that's actually really interesting, because one of the themes on Zer0es that pops up from time to time, of course, is the bias of sell-side research, but I had never thought that actually the macro stuff was really impacted by the investment banking or the nature of the investment bank business. But I hadn't thought of that with this you just described.
Yeah, I mean the macro stuff wasn't so much in terms of you could separate them. It's very all well and good to say the economy was going to fall off a cliff, but you couldn't then draw the conclusion that was going to impact on the recruitment companies and see a decimation of their profits. And it was similar to other companies as well. So it was a big eye-opener, and ultimately I got very frustrated with it. I switched banks to go to another rival investment bank where they gave me a bit of a freer rein. And one of the first companies that I had a sell report on was this company, not a huge company, it was about $700 million market cap company. Everyone loved this company. It was a company called Connaught PLC, which it did social housing repair and maintenance. And I looked at it. It just seemed as though it had red flag after red flag after red flag. I put this all in a research note as a sell recommendation, thinking no one would pay particularly much attention to it. And all hell broke loose with the share price collapsed by 20% or so, volume through the roof. Institutions phoning me up, telling me they'd always suspected there was something wrong with the company. Next call would be, your career in the city's over. You've made a monumental error. Panic set in because I thought, Christ, maybe my career is over before it's even begun.
Just wanted to ask you there because you had recently come from, you were doing macro research and then strategy, sector, industry writing, to all of a sudden you're saying this company has red flags. Were those more fundamental-based red flags, or did you just smell that there was something more nefarious going on? And I'm just kind of, if it's the latter, I'm just curious as to what prepared you for that, given that you really weren't trawling those waters beforehand.
Well, I wouldn't say I was prepared. I kind of stumbled into it, and just a lot of things didn't make sense. There was about 6 or 7 things that didn't make sense with this company. First of all, they started bidding for contracts 30-40% below their competitors. Well, why are they doing that? Secondly, it would be things like on the accounting side. Suddenly they started, over the last few years, building up significant long-term receivables where their customers are local authorities and councils, which presumably pay on time, and there's no reason for those invoices to be deferred that long. There was another thing where they embarked on this enormous software capitalization policy where does that make sense in terms of software development, where their whole business revolves around men in white vans driving around the country fixing broken doors? Probably not. Then you saw management depart quite rapidly and insider sales. So it was a whole combination of things. I think the main experience that I learned from that was that the companies can be very aggressive in their response. So, for example, they immediately responded by sending out an email saying that I was a mediocre analyst and I'd performed a masterful feat of incompetence and got my numbers completely wrong. The other lesson was that your peers in the market will come to the rallying defence of the company. So every other broker under the sun came out with a reiteration of my recommendation, again saying I'd made a terrible mistake. Ultimately, the company went bust within 6 months, though. So I had actually got my numbers completely wrong because in the event I was far too optimistic on matters. But through that period, you get a very thick skin, and I think that's one of the key things to certainly developing as a short seller, is to obviously try and hone your skills and be very good at what you're doing and analysing, but also deal with the pressure and work out how to deal with that pressure as well.
But there's something else there that also really strikes me, with all due respect. The flags that you found were, this wasn't stuff you had to dig deeply for, right?
No.
It's pretty self-evident. And it's, just that, A, there was such a large impact from you saying these things out loud. B, there was such an effort to defend the company against these facts. Why hadn't anybody said these things out loud before you did?
I don't know. I think it's pretty much a classic kind of emperor no clothes moment, really, in that it's pretty blindingly obvious that there's something wrong with this company and it all doesn't add up. And it literally just takes someone to point it out. Why people haven't done that in the past? Sell-side analysts would never do that because they know where their bread is buttered, in that they don't make much money from trading commissions these days, and the fact is the company was relatively acquisitive. The hope would be that they would win that brokership and be able to represent and give advice, M&A advice to that company, which is pretty lucrative. And there's no way you're going to get on that ticket if you've got a hold recommendation, let alone a sell. I think that the company was pretty much a roaring success, and so there was perhaps denial had set in amongst the institutional investor base that there was something wrong with that company, and I guess maybe just a general lack of interest in pursuing line of thought maybe across the market. I mean, the other thing was, of course, this was around 2009, 2010, when the market had been through a pretty terrible time in '08, and this was seen as quite a defensive company as well. So I think there were a lot of people that thought that there couldn't be anything untoward with that company.
You know, it also dovetails with an observation I've had about Europe, particularly from when we've done campaigns involving European companies, and that is, I mean, we'll put something out, whether it's, you know, casinos, Strower, even IQE, and the response from the sell side is, oh, this is old news, everybody knew it. But I mean, the stock has done this. And it's just, it's so often had us looking around the office at each other saying, well, if this is old news and everybody knew it, then like, why the fuck is there this reaction from us just saying it out loud? I don't think that they're wrong when they retort that this was known, but it's just, it's this odd game that seems to be played in Europe where, you know, we'll stay long the stock that we know has problems, you know, and hopefully nobody will say these problems out loud, but as soon as they do, you know, we need to run for the exits. Do you think that's a good read on it, or do you think there's...
Yeah, no, I think that's a very good reflection of matters. I mean, a game, I would argue, is very much what it is. The frustrating thing I find is that kind of the responses are the same every time. It's the fact that it's a regulated institution, so how can it be crooked? The accounts have been signed off by an auditor, so how can they be funky? The management are related, but that means it's managed like a family-run business, which is good. It's always the same responses to any criticism, and people don't seem to think that, well, you know, a lot of time and effort in terms of researching the company, huge amounts of company. There's a whole screening process involved. And ultimately, it's come down to this particular company where someone's been prepared to stand up and point at it and say, look, this doesn't really make much sense. This in the accounts isn't quite right, or there's inconsistencies here. It seems to be the same every time. And you know the responses that are going to be made as well. You know, I call them bravado buys, where never mind the fact that the management have been selling in droves stock in the past year or so. As soon as there's a short report come out or some criticism labelled at the company, they buy a little bit of stock, and everyone says, well, how can it be a fraud because they're buying equity in the business? Okay, fine, but that pales into insignificance compared to what they've disposed of in the years past.
It also somewhat echoes our experience. I think it was back in 2013, 2014. We were looking at a few companies that were listed on AIM. So one of them was Africa Minerals. You know, we saw just these ridiculous red flags that you didn't have to look that hard for, but, you know, claiming that they were losing, I think, $25 million a year to fuel theft. You know, and you just think, well, how many trucks must that be driving out of the complex every night that you've been unable to stop? I mean, just the background of the guy who was the controlling shareholder. He was a convicted heroin trafficker, and he'd been banned from one exchange and censured by another. And so we talked about, well, should we do something on Africa Minerals? And, you know, our view was that, well, it's just like, it's basically first page of search returns, how fucked up this company is. Everybody must know this, you know. They must accept it and still think it's worth over $1 billion US. And then Alphaville started writing about it and just putting some of these things out there. And it was profound. It's like the stock would just, you know, do this every time Alphaville put the stuff out there. And we were thinking, well, that's strange. And then we saw another one, Keystone Gulfport.
Oh, yes.
Yeah. I mean, claiming that in the Kurdistan region of Iraq, they had well over $1 trillion worth of reserves. And this thing was north of $1 billion market cap. And we were thinking, okay, everybody must know that, you know, I mean, all these red flags about the company, you know, in addition to the, you know, $1 trillion+ reserves. But then I think it was Alphaville again started publishing on it, and just the air came out of it. So we were looking at each other, and by we, I mean primarily my now partner Freddie, who's also a Brit, and we were wondering, what's going on with Europe? How do they not know this? You know, and the final straw for us was Abengoa. It was obviously a problematic company, and then that imploded. So we were really wondering, what is it about Europe? And you know, the kind view that we take is it's a very clubby environment, and people just don't do that thing about asking these company managers uncomfortable questions. The less kind environment, and this is Freddie, our resident European, saying that he just thinks Europeans are a lot more lazy than non-Europeans are when it comes to looking at their investments.
I think it's a whole range of things. I mean, I certainly think there's a lot of laziness at the institutional level amongst European investors, and I think there's general apathy. And I agree that there's not much work that goes into this other than meeting management and believing everything they tell them, or every 6 months that they meet them, or every quarter whenever they meet them. I think there's also, on occasion, there's kind of a herd mentality to it as well. I mean, I remember Quindell, which was quite a spectacular bust in the UK, which it just kept going up and up and up, this company. And it was run by a guy called Rob Terry, who by no means did he win first prize in charisma at all. Everyone that met him came out of the meeting thinking they couldn't understand a word that he was saying in terms of describing the business, but the way that he told the story and the narrative of it, it sounded like the best product in the world, or the best service in the world. And the mentality was, yeah, this thing's going up, but I'll be out of it after it's gone up 40%, and I'll leave some for the next man, and I'll be out before it starts to unwind. And of course, suddenly there's a moment where someone does stand up and say, I think it was Gotham in this instance, stands up and says, there's deep fundamental issues to this business, and it's not actually as it's portrayed. That everyone suddenly en masse kind of says, "Oh yeah, shit, okay, let's get out of this," and it just collapses. Each one's slightly different, I think, but above all, I would share your view on kind of the mentality of most long-only European investors.
Sorry for that digression, but it just seemed an opportune time to ask you some questions that I often do ask about the environment in Europe. But yeah, so from that first sell report at an investment bank,
Yeah.
then what happened next?
Yeah, so then I went to another shop, which was fun whilst it lasted, and I left there in about end of 2010, 2011, pretty just frustrated really, in terms of that research at an investment bank level wasn't how I would view research should be. So I started trading my own capital, which I did from 2011 onwards, but obviously still doing research. And I used to write a blog, which is still up, called Lordships Trading, and used to write some ideas on there. And it got a reasonable following behind the blog amongst hedge funds, institutions, press. Just would put up my ideas on there, and it was mainly short ideas. I'd say about 80% short, and would just did that for about the next 5 or 6 years or so, until then 2015 started looking at Wirecard, and then in 2016 still looking at Wirecard, and then late 2016 started to form Shadowfall as it stands today.